Welcome to this video on how to trade seasonal factors in the stock market. Hello, this is Mark from TradeInformed.com and welcome to this video on how to use seasonality to boost your trading and investment returns. Now, if you've seen the previous two videos, you will recognize again this table that I'm showing on here. If you haven't seen those videos, there are links on the screen and you can check those out to get more information. Now, in this video, I'm going to be looking at the trading strategy that I used to produce these returns. Now, I'm going to click here onto a different tab. And we can see here, this is a results tab of a trade-informed backtest model, which is built purely in Excel, and you can use it to test and backtest your own trading strategies. Now, in this particular model, I am looking at seasonal factors, and I'm going to show you the entire strategy from January to December, so all the year. Now, the strategy that I've used here is focused on one thing to begin with, and that is a high reward to risk ratio. Now, I'm trading a strategy that is quite simple, and it is in the direction of the dominant trend, but it is a simple strategy. So we need a high reward to risk ratio to make sure we capitalize on any opportunities we had to trade. So I'm using a ratio of 6:1 here. Now, this is based on the ATR. So this is a multiple of 6 times the ATR as a profit target and 1 times the ATR for a stop loss. You also have the functionality of using a trailing stop in a trade-informed backtest model. You can see it will improve and change the results over here. So the first key thing about the strategy that I am testing here is a high reward to risk ratio. The next thing that I am looking at is an entry trigger, and that is a retracement system. So you can see here we're entering on a number of days retracement. This is set to true. I've set it to 1, and what this means is that we will enter whenever our other conditions are met, whenever we have a close that is lower than the previous close, so we have a retracement, we will enter a trade. So it's a set to single day here. Now, the next significant thing about this trading strategy is that it has a long-term filter, and I'm using one of my favorites, which is the linear regression, and I can show you how it appears in this model here. It is simply a linear 200 period linear regression. Now, you will have probably seen the linear regression on charts when it is often accompanied by standard deviation bands. The linear regression is the best fit straight line through a series of data. Okay, so we have those 3 things in the trading strategy. So we have a high reward to risk ratio, we're entering on a retracement, and we have a long-term filter. This is what the strategy looks like over the long term from the year 2000 to the current time. And you can see over time the strategy has performed well, high compound annual growth rate with a low drawdown. So this is the strategy that I'm using to test seasonal factors, and I think it's particularly appropriate because it is entering trades all the time the conditions are met. So if I want to change my number of months to include, so I want to just do January to February, we can see how the strategy has performed. If I want to include 3 months, and I want to go from January to March, we can see how that entire quarter has performed. So we can aggregate months together. So we can do a 1 month, 2 months or 6 months analysis and look at different times of the year, making it highly useful for seasonal analysis. Now, I hope you found this video useful on a strategy to help you test and trade seasonal factors. The next video, I'm going to be looking at how you can optimize your trading months using this optimizer function in this model. So please check out this next video, and if you'd like more information about trading the financial markets and in particular about backtesting your trading strategies, please go to www.tradingform.com.